We were discussing bridging loans yesterday, and I'm going to try and explain them as quickly as I can. Before I continue any further, this is not financial advice, and do not do this if you don't have any experience, because this bankrupts people all the time. And as somebody who has done this before, I can tell you it's complicated, it's risky, but the payoff can be worth it. You find an auction property that you know is worth way more than the asking price or the reserve price, and hopefully you win it far less than the value of the property. So this property could be worth 200,000. You know that on the regular market, this property once renovated is worth 200,000 pounds, but to purchase it, it's worth 50,000 at auction. When you purchase a property at auction, you have to pay the full balance in about 28 days or sometimes up to 6 weeks. So you have to have all the money upfront ready to pay. It typically helps if you have cash. Once you win your auction property, you have the legal fees, the auction fees, and also the renovation cost. So that £50,000 property that you've just purchased will cost you an additional £50,000 on top of that to do all that other work, meaning that you'll spend the £100,000 pretty much on that entire property. The bridging loan itself is typically for 12 months, and the interest on it, if you pay it off in 12 months, is usually way less than the interest you pay on an entire mortgage. So it could be about 12%. That means that when you finish everything, the bridging loan company will want £112,000 at the end of 12 months. If you don't pay it off in 12 months, the rate goes up and it's so expensive, and then it becomes way more expensive than a regular mortgage. And now you're wondering, how do you make money out of all of this? Well, the property that you then have renovated, you get it revalued by an estate agent and a bank, and they do confirm that it's now worth £200,000. But what you need to do then is get a mortgage to pay off the bridging loan company. But the bank will want you to leave a deposit down. So you leave 10%, which is £20,000, and now the bank gives you £180,000. You use that £180,000 to pay off the balance. That means that you pay off the £112,000 back to the bridging loan company, and the £68,000 that remains is in your pocket. Yeah, I know. If it's this easy, why isn't everyone else doing it? A lot of people do try and do this, and they become bankrupt because they don't know how to finish the renovation project in less time than it takes to then have to pay off the bridging loan finance that they borrowed. Or sometimes they hugely overestimate the value of the property as well as the cost of the renovation, because if you get held up with planning permission and all sorts of other unforeseen things, the project won't take 12 months. So typically, you need to be able to do this renovation in about 7 months. If you'd like to learn more about personal finance and money management, give my page a follow. Good luck.